Ladies and gentlemen, welcome back to the channel and welcome back to another very volatile day on Wall Street, with the major indexes closing down 2.5 to 3.5% a piece. Guys, we have a lot to talk about in a very short amount of time, specifically how hedge funds are screwing themselves by continuing to short AMC stock at its lows of 2022. Guys, let's get into all of this key information. The only thing that I ask you to do is hit that like button and subscribe to the channel if you guys want to come trade with me live in real time as well. Link down below in the description of this video. But first things first. So what's going on today? If you have not seen the last video, if you are haven't seen anything that's happened in the markets over the last 2 days, retail sales today were very bad. We were expecting a drop of 0.3 month over month, 0.3%. We got 0.6% month over month declining number, and that is very bad. That's 100% worse than economists' expectations, and bad news is starting to be bad news for the stock market, not the reverse of bad news is good news is bad news type of deal. No, bad news is starting to be bad news, and I suspect good news will also start to be good news, and that is what is helping to push the markets down so much here today. On top of that, you are coming off of the lagging effects and the lagging reaction to Fed Jerome Powell yesterday, and the SEP report looking so negative. FOMC members are balls to the walls on raising rates. Now, the bond market is trying to call that bluff. Bond yields are actually falling off of a cliff yet again today. TLT up about 1%, so a massive tug of war that is currently happening here in the marketplace. The VIX remains docile, still up 11% on the day, but still down at some of the lowest points for 2022. So things are about to get interesting, or should I say shit is about to hit the fan. Ladies and gentlemen, let's talk about AMC and what has happened here today. Earlier in the day, we did see a rally in the price of the stock. Now, there was some news that came out from Disney about Avatar. We're expecting that to be a big blockbuster, blah, 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 blah. In regards to the short squeeze, that doesn't matter as much. Yes, we need to see good numbers. We need to see bullish, positive things happening with the company. But as of right now, how are shorts screwing themselves by not covering on their short positions? Well, let me tell you guys. So shorts are basically with this mentality of we are going to see this through until the end, until AMC is bankrupt, or we are going to get blown up. It's very bad risk management. So as these hedge funds take on short positions at the lows of 2022 and pile on these short positions, like, man, they are slapping the ass on those freaking short positions. They're putting themselves in a very bad spot. They're draining their liquidity and becoming so that if the markets continue to come down and AMC does not come down in the same way or not as aggressive, you put a lot of strain on your short positions, and you might have to draw equity from somewhere else, aka take out some capital from another part of your portfolio to remain in your short position. And that's likely why AMC did rally in the beginning of the day with the highest end range up here at about $6.08, currently trading at $5.56 per share. It was about a 50-cent rally in a very short amount of time. AMC was running at one point when the markets were first starting to drop. So there's a big argument to be had there that maybe liquidity might start to run dry, and maybe that'll help squeeze shorts out of those short positions. As you guys do know, shorts have not been covering. They have indeed been doing the opposite. I don't even care what Ortex says at this moment in time. The short interest has not went down from the settlement date, which was on November 30th, by as much as they say it did. The official report has the short interest at about 19.5% on November 30th. It has been almost nothing but straight down. So for me to sit here and tell you guys the short interest is 18.81%, the current number that we are getting today, that just simply in my mind does not work. That is not true. And this is only the legal short interest. This is not the naked shares, naked shorts, Mary puts. This is not synthetic shorts. This is none of that. This is just the legal shit. And usually the legal shit is like the iceberg, right? That's at the top of the iceberg. That's what you can see. And then what you can't see under tends to be a lot bigger. So even with this number, if it was 18.81%, I think that's still a very strong number. Short interest is up about 0.59% on the day. The live short interest currently sitting at about 97 million shares that are sold short, a little bit over 500,000 shares being sold short here today. And when you're shorting a stock into its lows of 2022, it doesn't take a lot to get a rally in that stock. At the same time, liquidity is very drained. This comes down to liquidity, guys. The largest short squeezes of all time have happened at some of the lowest points in the markets, and that's a big thing to know, because a lot of people haven't lived through short squeezes at the lows of the markets. Even in 2018 in December, there was some stocks, your pharma stocks, were really running at that time, going on a bit of a roller coaster, a bit of short squeezes like left and right. There was another day after day after day when the markets were falling and bottomed on December 24th, 2018. There were short squeezes happening that whole time. It's because the liquidity dries up. They have to pull that money out from somewhere and cover on those short positions. Now, as far as the option activity for the day, we have seen 5 orders totaling about $1 million, positive order value of 6%. So not a big positive day as far as options. People are not really buying call options on AMC. This is very prevalent. We're seeing the data right here. Also, something that helps push the stock down when you're seeing millions of dollars flood into put options. Simple, just Econ 101, put options, shorting the stock, probably going to make the stock go down. Now, as far as the technical picture on AMC, we did just get a bullish indicator as of yesterday. Does not look like that is materializing all too much today, but keep in mind, guys, you're only down 3.22%. You're down as equivalent to the NASDAQ. Typically, if AMC was such a bad stock and nobody wanted to buy it and the short squeeze isn't going to happen, the stock would probably be down 10% or more right now. It's showing a lot of resiliency, even though the markets are down a lot, and that is something that makes me very, very bullish. Now, we do want to watch this $5 level to see if we do bounce off this level, if we hold above this level, if we touch this level. It will be very important. If you break under $5, then where does the stock go? Well, that's something we need to talk about after we break $5. But it wouldn't look pretty. As long as we are above $5 per share, we are above the lows of 2022, and we are still in good territory, guys. And the markets right now, they're so sensitive to economic data that if we get one good data point that shows maybe we aren't going into a recession, well, that could be very positive for AMC, very positive for the markets. And what tends to be, negative for the markets tends to go into a negative reaction into AMC, vice versa. But it doesn't always have to be that way, and that's important to keep in mind as well. As far as the volume on the day so far, sitting at about 21 million shares that have been sold short, and this is the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10th declining day for AMC. Some very small positive days, but by and large, it has been rough, guys. So give you guys a little pat on the back if you're still in your AMC positions. I do think there is brighter days ahead, guys. After all, we're still not too far off that 50-day moving average, that golden bullet per se, to turn this trajectory around to an upside move. And more markets go down, more liquidity does get drained, and that is very important to keep in mind. And I think just a lot of people forget that, right? When it's just something that easily gets forgotten about, and I don't want you guys to forget about that. Especially, we'll make sure of that here in this video. So as far as the option activity, before we go ahead and wrap up this video, for this Friday, you're looking at about 11,550 calls that are currently in the money, about 250,000 calls that are out of the money. Now, if we look to January 20th, 2023, that's where you're getting about 7,600 calls that are currently in the money and about 402,000 calls that are out of the money. You also have about 142,000 puts that are currently in the money. So that's more puts that are in the money than out of the money. If the stock does make a upside move, that's a lot of de-hedging on the put side, aka buying from market makers. And that would be a lot of hedging to the upside if those calls did go into the money as well, aka buying from the market maker, guys. If we take a look Back to the Ortex, go to this option expiration for January 20th, 2023. The calls is sitting on about 62% of the total open interest. Puts is at 38.22%. So it does look like some positive positioning out to January 20th, 2023, guys. So that is going to be all for this video. Hit that like button and subscribe to the channel if you have not already. Thank you guys for watching, and I will see you in the next one.